Yeah, I think investors are willing to look past some short-term user issues because they see encouraging signs from the business. The top line beat was up about 8%, and almost all of that flowed through to the bottom line. So I think investors are buying into the fact that these health issues for the platform are important to the future viability of it, and right now they seem a little more focused on the business.
So what do you tell people to do today with the stock up by 12.8%?
Yeah, I think what you're seeing is just investors looking at what today's results mean towards revenue and profits in the future years, what they're valuing off of, and just flowing through and paying basically the same thing. I think the tricky part is figuring out how long the MAU issues will keep going, because eventually to grow the DAUs and monthly average users, yes, to grow the business, if they eventually need to grow that number. So it's just a matter of how willing are they to be patient for a few more quarters. I guess we'll find out.
Yeah, John, I mean, you say investors willing to look through those issues on user growth, but is it in fact a result of what Twitter is actively doing? In other words, are we able to get any color on how much essentially Twitter itself is culling its user base through getting rid of spam accounts and things?
Yeah, it sounds like that's a piece of the 9 million quarter-over-quarter decline. I think they also mentioned GDPR, which is the European Privacy Initiative. So they sound like one-time issues, and I think it looks like investors are willing to take the company at their word that this is good for the platform. We didn't make money from those accounts anyway. I think if it keeps going for a few more quarters, they may get impatient. But for now, it looks like they're willing to look past it.
Hey, John, this is Tom Farley. I called my old Georgetown friend, Ned Siegel, Twitter CFO, got him out of bed this morning to congratulate him on earnings. One of the things he was most excited about is the potential to take MAUs, who are currently really only MAUs, and drive them to becoming DAUs. And he sees a lot of potential there. Do you share that sense of optimism about increased user engagement?
There is an opportunity. I mean, they said the DAU to MAU ratio is still well below 50%. Facebook's is about 65 to 66%. So that's kind of the high watermark that they could potentially get to. I think they need to make it a more useful product for a broader set of people to really get there. But I think they've been at higher engagement levels in the past. So even just getting back to where they were, I think you continue to see DAU growth improve over the next few quarters.
All right, John, thank you for joining us today. We appreciate your time.
Sure, thanks.